What a beautiful morning. I own every house on this block, and I have bad credit. The bank was just handing out loans. One sec. Yeah, hello? The what? I owe how much? The interest rates did what? Adjustable rate mortgages? That's what I have? And they went up? So, are you in the market for a new house? I have 6 great houses right here for sale. Welcome back to Blognomics. Today, let's talk about the early days and the creation of Bitcoin. But to understand that, we have to understand the backdrop by which Bitcoin was created, the 2008 financial crisis. The crisis was rooted in the housing bubble and risky financial practices that spread globally. In the years preceding the collapse, housing prices surged, which incentivized banks to give loans to risky borrowers. These are the people, should the rates change, would be more likely to default on their debt. So many of these loans had adjustable rates, meaning that when the customer first received the loan, the rate may have been affordable, but there was the possibility that the rate could shift upward and that monthly payment could be more expensive. So a borrower could take on a loan thinking, I can afford this, $500 a month, that's within my budget. But what happens when the variable rate shifts and the payment's now $800 a month and it's just not affordable? So financial institutions bundled these risky loans, these subprime loans, into security instruments called CDOs, which they packaged together and sold to investors. Now, the deception behind these CDOs is on the surface, they look like good loans, but they were packaged with junk bonds or these risky loans underneath the better loans. It appeared to look like a good investment, but in reality, it was junk. Driven by profit, these financial institutions themselves invested heavily into these CDOs because the housing market at that point was doing well, and historically the housing market has typically gone up. This all came to a head in 2006 as the housing market slowed and interest rates rose, triggering defaults, as people were no longer able to pay their monthly mortgage. This created a chaotic domino effect. As individuals defaulted on their subprime loans, the CDOs that had been distributed across the financial sector lost their value, causing the collapse of the financial system, not only in the US, but worldwide. Consumer and institutional trust in banks eroded, causing lending freezes and a liquidity crisis. Now, when mega bank Lehman Brothers declared bankruptcy, the whole thing fell apart, and the confidence of the consumer and financial institutions was eroded dramatically. Millions of people, not only in the United States, but across the globe, lost their jobs and even faced homelessness. And this is all due to Wall Street's subprime mortgage schemes. And banks got off scot-free with a slap on their wrist. Essentially, no one on Wall Street who caused this disaster was held accountable. So there has to be a solution, a better way, without this corruption and this greed. What is it? Introducing Bitcoin.